Hello, everybody. My name is Gary Fowler, and it's great to be here for another edition of VCTV. And today I have an incredible guest, Raghu, entrepreneur, investor, advisor, and all-around good guy. My name's Gary Fowler, and I'm a serial entrepreneur. I've done 17 companies and 2 unicorns. I was on the original management team of Click Software, which was sold to Salesforce for $1.35 billion, and also Eva.ai, an AI HR tech company. Love artificial intelligence and quantum computing. I'm the CEO, co-founder, and president of GSD Venture Studios, a premier AI and quantum venture studio located in Palo Alto, California. It's great to be here on VCTV. And Raghu, can you say a few words about yourself?
Good morning, Gary, and thanks to VCTV. I'm based in Princeton, New Jersey. This is right in my wheelhouse. I work with a lot of pre-seed and early stage companies, both helping them with strategic planning as well as whatever it takes to get them from first to survival, then to sustainability. So work with early stage deep tech companies, try to get them to de-risked MVP stage, and then take them out to get funding.
Okay, so Raghu, you go down and, some people say that these pre-seed rounds are family and fools. What's the deal?
Yeah, we call it friends, family, fools, and founder.
And you don't tell it to the folks when you're getting their money, do you?
Yeah, I think it's always very dicey.
Or does it go, this is the best investment you're going to ever make? Let me tell you a little bit about it. This will revolutionize medicine.
Actually be starting with the founder, but lots of times it starts with friends. But it's true. You do whatever it is to get you going, and I've always seen it comes together. The key is to get the very first investor. That changes the momentum. So once you get the first investor, then I think things fall in place. And that first investor is extremely important, that they have they've done some kind of due diligence, so they have the others can kind of piggyback off them, because in many of these cases, the kind of investors you get may not do any due diligence or may not be capable or want to do due diligence. So if you have an investor who has credibility in that space, that helps a lot. Because the others will just say, oh, he's invested, okay, I'll put whatever. So
the key is what you got to do is give somebody a good deal, bring them in. That's got name brand. So what happens if family, friends, fools under $750,000? How do they cut a deal? How do they come up with the documents? Is it just by word of mouth? And go to your dad, go to your cousins, go to your relatives, go to your friends. Do they do it without signing anything? What do they do?
No, I think now everybody has gotten savvy. The safe instrument from Y Combinator is used. Before it used to be convertible notes. So there are a lot of templates going around. So people usually want to punt on the valuation issue, which is the right thing to do given that earlier stage, and just give a discount on a future valuation and move on. I think the key is to have a good pitch deck that doesn't talk about too much in detail on the later stages, but at least for 18 months to 2 years, reasonably lays out what you can achieve and what will the pre-seed round get you to. How do you hope to scale the rest of the way, especially the runway, as well as what you can execute in terms of milestones. I think it's important to have some credibility, and I feel the advisory board is very important in this, because that gives you the credibility you need, especially for first-time entrepreneurs, because it's good to have a seasoned team as advisors, so they at least what to expect in terms of the journey.
So what kind of so you look at these pre-seed investments, do they have sales or not? Clear market opportunities seem that would be important. they need to hire people. What kind of signs does a company have then that they should start raising money? When does it start to be okay?
I think there are all kinds of companies. It depends on where the founders or founding team is coming from. I mean, if it is a type of serial parallel entrepreneur, then they know the game. They just kind of, they're just looking for a place to start. So they will know all the tricks of the trade. First time or entrepreneurs, it's a little bit different story. Some of them are actually working full-time job and they're trying to get enough money so they can, come out and hire a couple of people and make it real. And so in that case, it's best to have at least there should be at least one full-time person in the company. Otherwise, it's very hard to get credibility. So that to do that, obviously it is a risk, and lots of times, in a family, one of the, either the one of the spouses takes on like a, job with all the, stability and benefits, health insurance and all that, and other person ventures out. That's one place. Or you just use up your savings or the credit card and just jump into it. But it is important to be all in, because otherwise you tend to be suboptimal in terms of effort, because you are always holding on to somewhere else, and so that doesn't it doesn't inspire confidence in the investors as well.
Yeah, no, I hear you. Well, some people keep their full-time jobs and they want to do the other company and they're never fully in. That's right. So what's the best deal, without naming names, with the best deal you've ever gotten into where you said, I'm going to put this money in this pre-seed company and now the company's world renowned? What deal? What's the best deal, and what's a typical deal look like? What kind of success rate do you have?
Yeah, I think the best deals are ones where you know that you can build the company out. It's where I can be directly involved, as opposed to just investing in and believing somebody else's story in terms of what they can do. So there are a couple of deals like that where there's a company that had a lot of IP, which was trying to monetize that, and I was able to meet and the founder, and we did a small deal for one of the patents. And once we got a good relationship, we decided we'll take the whole thing, and we invested about acquired 49% of the company for $10 million. And it's easily $1 billion company. And IP, especially in biotech, is precious, because ultimately, if you're successful, it's the IP that gives you the value. Unlike in some other areas where it's more used for blocking, but in biotech and pharma, IP is very, very valuable. So I think finding some companies like that one, I think, is turning out to be at least a 10x within 3 years, 10x return. So you don't always find those, and so something like that where you can directly be part of the negotiation and part of the execution, I think gives the best returns. But otherwise, I would suggest that from an investor perspective, you put in smaller amounts and then distribute it, because, as you know, the rate of failure for startups is very high. So you have to diversify.
Yeah, 9 out of 10.
Yep.
So how do you know, what are the signs when you go in for a pre-seed investment? What do you look for in a CEO? What's important?
I'm looking for passion, somebody who, is willing to, conditions are going to change, but someone who is going to find a way to navigate, whatever type of wind you have, or, whatever issues you come across. So I think that is one. The second is someone who is coachable and is willing to learn. Basically, someone who knows what they don't know, so that they're not just
somebody that knows what they don't know.
Yeah, that's most important, I think.
It's early in the morning for me.
Otherwise, you think you know everything and you
Or
never
somebody
learn.
that knows what they don't know, knows that they don't know. Yeah.
Oh, that's where you start, right? That's a learning mindset. So
It's
growth
7 o'clock in the morning here in the East Coast of the United States. It's a little early for us.
mindset.
No,
So
but I hear what you're saying. I mean, and those are the kind of people that are flexible and resilient, and people that understand that they don't know and are exploratory, right? And they want to go out and learn. It's really important. I hear you. So you're going, where do you find the companies? Where are those pre-seed companies located?
I think now they're all over the world, and before I couldn't find them, but now because of the pandemic and resources like VCTV, I think it's become a lot easier playing field for companies from all over the world to reach the potential early stage investors. But before, it used to be mostly through networking. There is all these different organizations like EO Entrepreneurs Organization. There is peer advisory boards like Vistage, YPO. There's different kinds of networking places, which is one area. Other ones are like the TIE, which is another one, the Indus Entrepreneurs. So I think for me, I find most of those through networking opportunities.
That's great. And so you go out and, what are the hot, so if you looked at, these are the hottest technologies that I'm interested in investing in. What technologies? I know you said biotech. So what's hot? What's your, top five? What would you look at today?
Well, the what is hot obviously changes based on the time, and whenever something gets hot, like a lot of companies jump into it. And as you know, if you remember the Bitcoin, one of the Bitcoin events I went to, they had this Bitcoin soda, but they were just using the Bitcoin symbol, and so it has nothing to do with the Bitcoin. So people just try to there's all this buzz, so you have to watch out when something like that is there, and look for companies that have core technology and the right team and right use cases, because it's people just try to jump in. A lot of companies do that, and there's better chance of something succeeding if their innovation is more basic, so there is time where they have before others catch up. So if you are doing a very small incremental innovation, that will work if you have a very seasoned team which can very quickly ramp up and get in and get out and be very quickly up, leave others kind of way back, way behind. So something like that works, but otherwise you need to have the innovation needs to give you enough space from the others. So that means that you're doing something, disruptive to some extent. So the technology right now, I think, AI, of course, that AI is, in everything. It's just when we had the .com, it was all about the internet, and so every few years it changes. But I think AR VR was very hot a couple of years back. Now it's, I think, making a comeback, post pandemic. But in the middle, it kind of, I think the other things came along because of the pandemic and got accelerated to the forefront, especially health tech.
Toilet paper.
Yeah, that's right.
I mean, here's another example, right? The
Mhm.
supply chain, where there wasn't transparency in the supply chain, people wonder why we can't get things, because we didn't have access to the supply chain. Another opportunity, startups.
Yeah, pandemic completely disrupted the supply chains. In fact, it's still going on. I know my friend who is in the specialty chemical space tells me that the containers that were arriving from China now, like, are taking few months longer to arrive, few weeks longer to arrive, and they're about, I think the costs of shipping have gone up about 8x in the last year. So it's changed the game a lot, and so I think these are, of course, events that nobody can control. But as you rightly pointed out, there's huge opportunity whenever there is this kind of very big change that impacts large segments of the industry, and these are physical supply chain, physical items. There's no getting around it. If you need it, you have to get it some way, right?
Exactly. So you've been very successful as an entrepreneur. How did you do it? How did you get your pre?
I
How did you
first built my
fund your
company with I mean, just bootstrapped it completely. I only gave my first investment was for survival. I was doing great, and then .com bust happened, and I had a bunch of employees in India and in the US, and I had to figure out these were all young internet web developer types, and suddenly, the bottom fell out. So I had to find a way to keep the payroll going. So I had one gentleman who came in through advisory board, and he put in $400,000, and I'm happy that I got him a very great return. But it wasn't something I looked to do in terms of investing, getting investors in my first company. And I had after I got them involved, he took us into a lot of. I pivoted into federal government, and so I can see how important like an angel investor and those kind of connections are for early stage companies, and that got me going. After that, I look for specifically how a company can scale and where can it be 2-3 years down the road. So I think it helps to have that advisory board. I think is very important. And
Yeah,
now,
no, connections are really important. Well,
Mhm.
how does a company do it today? Have you ever invested in a company without seeing them by just doing a Zoom
Yes, a
today?
lot. In fact, now most of the things are happening. I mean, you and I haven't met yet in person, so sometimes Zoom is you get a lot more attention on Zoom than if you're in person because the distractions are less, right? So I think it's actually Zoom has helped a lot because people aren't wasting their time commuting and things like that. Of course, there is other types. The I find that the first meeting, once you can establish the chemistry, then I think Zoom is okay. I mean, it depends on for established relationship. It's easy to carry on with Zoom. The initial meeting, and I mean that also. I think once we figure out how to get past that, Zoom is okay. Yeah, I think it's changed, but it's leveled the playing field definitely for global opportunities.
No, I agree with you. I remember 6 years ago when I was one of the first Zoom users, and I used to send out the link, and my friends would say, "Why are you sending me this out? I don't need this. I have Skype." And I said,
Mhm.
"Because this is really cool. How do I know where it's coming from?" I said, "I just sent it to you. I got it from the VC that funded the company. Take a look at it."
Mhm.
So my friends started to get on it. I said, "This stuff's really good." I remember it. But that's how it works. I remember back in the .com era myself. I did one of the first e-commerce consulting companies with Broad Vision. I don't know if you
Mhm.
remember
Yeah, I
Broad.
remember Broadvision.
So Hong Chen funded me, and
Yeah.
Hong, you were watching. Hi, buddy. Anyhow, so we started to do it. People said, "Oh, this is never going to work. People aren't going to put their credit cards online." We had no money. I had to fly to the UK and raise total $6 million. I did, and the rest is history, right? And they said, "Oh, this stuff, Broad Vision at the time isn't going to work." I remember his net worth went up. He was like zero, went up to $8.5 billion in like a year and a half. He was one. His company was at one time the top company in the world. But that's how fast it changes too, doesn't it, Raghu? You never know.
Yeah, you have to be careful not to get caught up in that thing and look at I'm going to be worth this and that, and I think focus on the. I think execution is important. If something you cannot grow a company assuming that you're going to exit, you have to grow it so that it can get revenues and be successful, profitable, and then exit will happen. And but otherwise, you just it's not a good story because the investors can tell that nobody's I mean everybody wants a return, but the plan needs to be for something that is creating value. So
So how do these pre-seed companies, how do they get the visibility to get out there? What do they have to do today as opposed to 3 years from now to get visibility?
nowadays there are all these there's a lot of competitions. There is accelerators where you can get to meet a bunch of mentors and investors in one shot, it's become very popular. You run one of those, as you know how much exposure and growth company can do just in those like few weeks because of the kind of inputs you get from multiple perspectives. I think that's very important. I think that helps you kind of hone your pitch, so that it makes a lot more sense, because we all have our view of things, and which is a little one-sided, and it helps to get multiple people's input, and especially.
Raghu, we used to say, don't believe your own bullshit. That's,
Yeah.
you got to have a lot of input from the outside. It's really important. How important are presentation skills for those executives?
It's very important, especially if you're doing it on Zoom. The personal charm doesn't always work. Your track record helps, but it is always good to, everybody's style is different, but you have to obviously capture. It also depends on. I think the different types of investors relate to different types of people. Some people who are very analytical are going to look for all these numbers and all that. But I think the messaging is very important, and you need to have, as you know, there are most of these profiling tools say there are 4 types of people, right? Whether it's DISC or whether it's Briggs, Myers-Briggs, whatever. So your presentation needs to address all the 4 types of people: the visual kind of result-oriented people, the analytical people, the kind of the social, emotional relating people. I mean, ultimately, you're selling based on. I mean, people are buying based on emotion, so they will want to be analytical, but you have to make an emotional connection ultimately.
Yeah. I remember I was in a car with Guy Kawasaki over in Europe one time, and he said you need to enchant people, enchant, and he said that's part of the show, right? You got to be a showman or show person as part of it, but you got to have the right stuff. I mean, you got to have the right stuff. How important is it if you've been how likely are you to invest in a pre-seed company if the person's a serial entrepreneur?
It's a serial entrepreneur. It's much easier decision because they've been through the path before, and so they know where the potholes are and how to navigate. So that from a leadership perspective, it helps to have somebody who's doing it, for the second, third time. But that doesn't mean that you might have been lucky once, and which is true for everybody. So you still have to learn, and I think what I look for is somebody who is, as I said, coachable, who will learn from others, who is always knows what the value proposition is, but goes out and hears what the customers are saying, advisors are saying, and modifies the path in terms of prioritizing things that are needed. And it's always very, very important to get the first kind of charter customer, because if somebody is willing to pay money for whatever you're building, that changes the game completely, because you know that you have something. Until then, it's like you're still a solution looking for a problem. So those people who have been actually on the customer side and have seen the opportunity and then start something, and I think those are the best kind, because you already know the need. Because finding the need is is the biggest problem, right? Ultimately, because if there is a need and you come up with a solution, then it's execution. Execution is not simple, but at least you're starting at a place where there is need. So.
Yeah, I remember, the book friend of mine wrote, Bob Dorff and Steve Blank, friends. The customer development is really important going out. I know with my company, Eva, we would walk down the street in Palo Alto, and here I got a billionaire partner, David Yang. We're walking down the street, and we go into cafes, and we take our iPhones and prop them up, and then we would do a presentation to see what the reactions are before we started to make the changes to the project. Then I would send it over to my engineers so they understood what the customers want. So it was amazing. We would do 50 interviews a piece, and then we would take it back, and it made it incredible. What are those potholes that the pre-seed startup should look out for? What potholes are important to navigate around?
I think team is very important. So sometimes people, just because they're friends, get into, or it could be spouses getting in, and that's all good. But you have to have a different relationship in the business as opposed to whatever is outside. It actually, friends and spouses can make great teams because there is already understanding, but that understanding has to be put to the right use, and otherwise it becomes negative energy. So one of the things is the making sure that everybody is on the same page and people understand their roles, because you have, if you don't have some role, you don't have the expertise in your team, you need to borrow it either from an advisor or some other outsourced resource, so that without all the pieces, it's very hard to advance the company. You need to make sure that accounting is taken care of, because you cannot just say we'll take care of it later. That does not work. From the beginning,
And
get
your
yourself
taxes too.
yeah, QuickBooks, and somebody has to track everything.
Yeah,
So,
no, I agree 100%. And that's one of the things, sometimes startups forget about that. They got to make sure. It's like building a house, isn't it? It's about the foundation, creating an incredible foundation. In fact, my first company was a construction tech company. I had no idea what I was doing. And I didn't know what pre-seed investment was. I thought, well, I'll just take it out of my savings and put it in, and I'll do it. And I went to the bank and got loans, and all of a sudden I started making all this money. And I thought, this is unbelievable. This is how easy it is to build a business. It wasn't that I was the smartest person in the world. I was the luckiest person in
those
the
kind
world.
of businesses are a lot harder, because you have to have inventory. You need to, anything that requires infrastructure, where you have to invest in infrastructure, always is a little harder, because the risk is higher. You need a certain amount of at-risk investment, which is higher than like a purely software businesses. You can mostly do it on sweat equity, because it's more brain power that's needed, as opposed to so I think the different types of businesses require different types of investment, and there are a lot of models out there. If you can get to revenues and cash, then the certain types of debt financing work, which are better, because you don't give up as much of the company, but they come with the bigger risks in terms of if you take on debt, obviously you need to have a plan to pay back.
Yeah, no, we would draw. What I did is I took a piece of paper, and I would have an artist friend draw up the house, what I wanted it to look like. Then I would go down through and on graph paper draw out what I wanted the inside. It was just maximizing space. And I bought lots. I bought the top of a mountain. Put an option.
How long ago was this?
Long time. Long time. And so I started building the houses up to like 9,000 square feet, something like that at the top. But I used the same model, and people loved it. I built, it was pretty simple. I bought a part of the mountain in front of the hospital, and doctors didn't want to drive so far to go to work. It's pretty simple. And then once I sold one to the top doctor, then the other doctors started to come in. This is not rocket science. It's like fishing anyhow. But the point is, I thought it was going to be really easy. It was easy, actually. But, and I would draw it up, and they would get the funding would take place because I would have a sale. So as soon as I had a sale, they said, oh, you can do another house. But what I didn't understand, once interest rates go up, the housing market starts to shrink. And I had incredible technology that I put in these houses. So anyhow, the point is, when you're going down through it, there's all kinds of different ways where you can fund. There's all kinds of opportunities where it's debt. You've got to enchant the folks that are out there. You got to make it exciting and interesting. Get the customers, because as Bob Dorff and Steve Blank say, when they take money out of their pocket, that's a good sign. Make sure you just don't go down and continue to invest without making sure that the customers really want to purchase what you have. So we're coming to the top of the hour, Raghu. What are your closing thoughts and how can people reach you?
I'm best reached on LinkedIn, Raghu S. Rao. I guess Facebook also, a lot of people now, it's become more business type of, network. But LinkedIn is the best place to reach me. I think my advice to pre-seed, entrepreneurs is to get the best advisors you can to be part of the team, and then hone your pitch. And I still think the founder friends family is you need enough runway, maybe like a few months, and within that you get to do the pre-seed round. And I think once you have that advisory board and the founder team, most of the stuff is done, because you found the problem, and then it's all about incrementally executing it and finding that first customer. So
That's great. I want to thank you for being on the show today. Remember, startups, passion, optimism, visualize where you want to go, and get out there and get those customers, because it's real important to have customers. Don't get into the situation where you start to believe your own BS. Go out and check for customers. We each have an opportunity to put our own dent in the universe. All of you out there, investors that are out there, look for startups in places you wouldn't normally look, because there's not going to be as much competition. Look around the world. We all have a duty. Technology is the way that we can each change our lives. Technology is the way we can democratize opportunities. And technology is the way that we can make this world a better place. And we surely have a lot of challenges in front of us, but I believe we can accomplish them. My name is Gary Fowler, and I am happy to be the host today of VCTV. I'd like to thank the entire LaToken team for making VCTV possible. Hasmick, Sonny, the rest of the VCTV team. We will be back tomorrow for another exciting edition of VCTV. My name is Gary Fowler, and I'm the guest host today. Stay happy, stay healthy. Most importantly, stay safe. See you later. Take care, everybody.
bye now.
Bye-bye.